go live.
Let's go. Let's rock and roll.
You have 3 minutes until we start, so you can continue to chat.
Yeah. Hey, here are the first two sell signals on Dell at around 117 or so. This is in trouble.
Yeah, you think it'll find support at its 200-day, which is what, 121, 122?
We're there now. We're there now. It's the 200-day 122.73.
Probably a bad sign.
You've already kissed it on 10 times normal volume on a gap down. I can make the case this is a left head. Here's the left shoulder. Here's the head where the volume evaporates. It's not textbook, but it's pretty damn good. Dell's going down.
Okay.
Dell.
Next.
Mars and I were talking about Dell. Man, when was that? Was that like May or June or something? Oh.
Stocks had a good run. It's up 85% this year.
Yeah, it had a run all based on hype, and then the numbers turned not bad. I thought yesterday's numbers were solid, but obviously, stock ran to 180, and then it went to 90, then went back to 150, and now it's back to 120 or something like that. Yeah. It's all over the place. If you're going to be one short bearish, you made a lot of money on Dell this year.
Michael Dell made a lot of money this year. I remember that we were talking about how much stock he sold.
He sold a lot of stock. Yep.
He sold a lot of stock.
While he was on TV touting it. He was touting the stock while he was selling it. It was public.
Yeah, like Tepper. Like Tepper.
73-1, so it doesn't matter.
David Tepper did that same thing. If you guys remember, he's like, buy China, buy everything. Then the 13D comes out, and he's like, oh, maybe I was lightening my positions.
Right.
Well, he's not popular down here anyway, the way he blew up the Carolina Panthers in the NFL.
Yeah, he's a fantastic hedge fund manager, but he's probably the worst NFL owner I've ever seen. Like, it's an amazing dichotomy of being such a smart guy and also such a bad owner at the exact same time.
Well, he pushed for the building of this big training facility, and then halfway through the construction, after the Rock Hill, South Carolina, dumped a lot of money in it, he pulled out, and it was a big municipal mess.
Retweet the show, folks, if you haven't done already.
Yeah.
Look at him. It's almost embarrassing how much money we're making for people.
I love it.
I pity everybody else.
Damn, Hims is 33.
Told you. 30-44.
David, I sold out. I sold out at 29 change, and I only took a little bit just because there was so much entertainment going on here with Hims. When I went back to 20, I was like, I'm rolling. Let's put a little bit on the don't crap line. You know what I mean? I'm one of those guys who plays the don't crap line. It's like that antisocial player at the end of the table, and then everyone craps out, and you're just like the silent guy's like, all right, I'm gonna take my money.
Brisket. It's brisket.
I feel like Marson would play the don't crap line with me if we were all in Vegas. We just see the guy at the end of the table. You give him like a low five when everybody else is wrong.
We rock and roll. Let's go.
They go ready to roll.
All
right. Let's rock and roll. All right. Welcome. It's God, I can't believe it's November 27th. This year has flown by, guys. This is Wall Street Beats. We have my Eagles fan, Mr. Robert Marson. We have the South Carolina gentleman, Paul Meeks. And we have Kevin, who doesn't like to call me Kevin, call him Kevin, Bakes Baker. Welcome to Wall Street Beats. We're here to make you a little money, talk a little stocks, have a little fun. Paul Meeks is going to start us out. What do you got, buddy?
So last night, Ben, there was a kind of a blitzkrieg of technology stocks reporting. A couple of themes from that I've taken away from it. So first of all, in consumer electronics, you had Dell and HPQ. HPQ, the PC company, not HPE, who doesn't report for a few weeks, the enterprise server company. And we're getting some real negative signs on consumer electronics. We also had Best Buy tell us the same thing, taking their guidance way down for the next quarter. And what I'm talking about here is the smartphone business and the PC business. You may recall, like the fanboys from Apple and other ones, said that on the edge, these devices on the edge, like smartphones and PCs, were going to get a mammoth bump from AI. And I think that that still might be the case, Ben, but I think it's going to be many quarters away. It actually might even be a lackluster year in 2025. But everybody thought for some reason this Christmas was going to lead to the mother of all iPhone cycles. Don't think so. The other thing we have to know about from Dell's CFO is you can expect, even in the strong AI business, that we're going to have a little bit of a hiccup here because they've seen a slowdown in orders based on customers waiting for the Blackwell chip from NVIDIA. Now we know it's in production, but it won't ship in size. And so think about it. Even the AI infrastructure trade is, I don't want to say it's done, but it's going to be a little bit delayed, right? Until they can ramp up this chip. And of course, it all comes down to NVIDIA. So it was the first time I actually heard someone admit, the CFO Clark from Dell, that this was going to be a problem, not in the long term, but in the short term blip this quarter, maybe even bleeding a little bit to the next. We also had CrowdStrike last night. Used to be my favorite cyber security play, and shame on me because I sold it, when they had the outage back in July, and it was a good move. But you know what? That stock has bounced off the bottom. It's almost back to its old high. And the thing, it's surprising to me, and they reported results last night, so the stock's down a little bit today, is that they still have not quantified, and I don't expect them to, the legal liability from all these transportation companies, particularly Delta Airlines. And so I don't know how you can make a bet and why the stock has bounced so big when they say that their damage monetarily from the outage for customers is going to be 60 million, and one of their customers, just one, and they got many, is Delta Airlines asking for 500 million. And this hasn't even gone to the courts yet. So I don't get it. I miss the bounce, but I still say, how can we invest with confidence with that mammoth legal liability? And then I'd say the last thing is we had two software companies. I've been kind of waiting down the pike for the software names because I actually think some of them will be disintermediated by AI in the fact that they say that they're going to be helped by it. Autodesk and Workday reported last night. Stocks down today. Obviously, not so rosy guidance. Intel announced it's $8 billion that they're going to get for the CHIPS Act, primarily for this big fab outside of Columbus, Ohio. And of course, they're trying to sneak this one past the goalie before Trump comes into office and then withholds those funds. Though legally, once Congress has appropriated money, the president can't do anything about it. But we know that Donald Trump could try. And so I don't know. Intel's been such a bag of shit, with their execution. I don't know if I'd give them any money.
It's a family show.
That's a
sorry.
nice way. That's a nice way of saying it. It's actually funny. I spend every
Bring
February.
Bring your kids into the room. And then last thing, Ben, I'll say is Databricks. Databricks is one of the biggest unicorns and one of the most important privately held tech companies. They just did a raise that was up 40% from the raise less than a year ago. And it's kind of interesting to me. This is already a $3 billion company. And here's another company that could easily go public, decides not to. So it's kind of interesting that you have the tech IPO window being pried open right now. I think this CoreWeave is going to be a monster IPO in the Q1 or Q2. But Databricks is an interesting story. They're still losing money, but they're the biggest of the unicorns. could easily go public and decide to do another round privately held. Kind of interesting about the kind of the whole M&A and IPO scene in my sector.
So let's talk about CrowdStrike for a second, because I remember when that happened, and that
Yeah,
thing was an unbelievable short for a short period of time, and clearly it's come back, and it's like, hey, this is part of the system. Forget about that little,
yeah.
whatever you want to call it, blip. Let's call it. What is CloudStrike's market cap back to? Like 80 billion, 85 billion, something like that?
Yeah, I'd have to check, but you can see the stock's almost by this chart here. It's almost back to its previous high. When yeah,
Right. So, but I guess I'm saying is, what do you estimate the liability? So you say, okay, they want 500 million.
well,
Like,
that's just one
what do you
customer,
think?
500 million Delta.
No, agreed. But I'm trying to try and size it, right? So it's like, okay, we have an 80 to 90 billion dollar company, and what do you think that liability is that's hanging over them? Is that a 3 billion? Is it a 10 billion? Because I always think about that of like, if you guys
Yeah,
remember, I'm sure Robert remembers when BP had the oil spill in the Gulf of Mexico in like 2010, 2011, whatever that was. It was like, oh my God, they're going to have like this huge liability. And I feel like the market has an ability to always overestimate what the liability is for these companies, because it's
yeah,
easy to let our imaginations run, right? But like, I just think about, like, is that a 5%? Is it a 10%? Like, what is that liability
yeah.
relative to the market cap?
I would say, Ben, if you push me on it, I'd say maybe a $5 billion,
Okay,
because
okay,
American would come back, United would come back. They even effed up the railroads for a few days, as you may recall. But if Delta is asking for 500 million, and I've seen how they've broken it all out, all the different components to come up with that number to build a legal case. Yeah, I would say about a $5 billion handle. And remember, they polluted Microsoft systems. And so maybe Microsoft has to dig into their pockets. We'll see.
right. So I guess my point is like, that's like 5 to 10% of the stock, let's say, right? And so, is that enough? I mean, how much is it down today? It's like got a nice little red candle. It's
Yeah.
down 10% today. I
Yeah,
mean,
because
is that
because their the results were fine, in line, but they didn't blow it out. Now the stock's being priced for blowout earnings, and I don't know if they get them. And that's even
right?
before, Ben, the issue with the IT outage last July.
Right. And yeah, just to that CoreWeave comment, we had talked in the pre-show, but like that thing has already been re-rated up 60% since
Yeah,
whenever we were dealing that pre-IPO deal a couple weeks ago. So that thing still seems to be fully running, and the Wall Street machine seems to be fully running. But
yeah,
we'll see where it goes in the Q1 next year. But again, I've talked about it the last couple days, or really since Nvidia's earnings were fantastic. Obviously, the stock was flat, but just anticipated so much. Is that we're just kind of in this Santa rally mode, and what's going to be on the other side of it, right? Like, there's going to be some stocks, there's going to be some stuff, but like even Trump coming out with the tariff stuff yesterday,
yeah.
with Mexico and Canada, Margaret still's like, we're digesting it. It's fine, whatever. So we've shaken off a lot of these things, and it's hard to see anything that's really getting in our way in the short term. 2025 could be a completely different animal, but short term, I don't know.
But Ben, I
So
do think this manufacturing ramp. I don't think it's a delay. It's as expected, but this manufacturing ramp. If I'm Dell, I'm not going to buy uh, pre-Blackwell systems. I'm only going to buy Blackwell systems. So it may give us an opportunity, Ben, because what will happen is some people will uh, misinterpret that as the AI trade is done, and it's
all right,
actually,
all right.
and so that could give us an opportunity to buy. I don't know if I want to buy any of these server companies, but Nvidia and some of the other plays, because I think it's going to cause some consternation from the people that really don't follow this stuff carefully.
Yeah. Yeah, well, we'll keep an eye on it, and it'll be fun to do the show the day the CoreWeave IPO comes out. We'll have like
Woo!
a that'll be a nice little. We'll do a live track, and I'll have the dealers posting me what the what the look is as it opens up. All right, let's
Bring us
go to my man
that bubble
Rob,
days.
Robert Marson. Tell me how great Saquon Barkley is before you tell me how great Elva is.
He's pretty good. Looks like I'm going to win my bets on the Eagles. I took the Eagles winning 13 games this year to pay off with some buddies, and I'm going to win. So after the first 2-2 start, I didn't think so, but we definitely have things turned around. And the
In New York, we decided to pay Daniel Jones instead of Saquon Barkley, and now Daniel Jones has just been. He's not even on the bench.
Pretty happy. We're pretty happy we had the chance to pay him. There's not an Eagles fan in the world that doesn't appreciate
Don't
it.
piss me off, man.
Thank you very much, New
I
York
agree.
Giants.
I agree. My Packers got Xavier McKinney. I don't know the Giants. They just said, "Hey, you guys can have all our best players. We don't have a real football team here. You guys can all just take our players." It's just an insane situation. Plus, we got to get.
Maybe they're trying to tank on purpose. I don't know.
Yeah, you guys are just on vacation. Thanks a lot.
All right. That's enough football. As much as I could sit here and we could turn this into a football podcast. Robert, tell us about Elva.
All right, Electrovia. So this is just an update because I have exposure. My first, I guess, discussion was when I was buying it around $4 because they had grown last year from 22 million the year before to 45 million, and they were supposed to do 65 million this year, which is the September year. They're on a fiscal year in September, so that's over, and then maybe closer to 100 million in 2025. So it was a cheap stock if they did that. Unfortunately, they're Canadian. They really don't know how to run a business that well, in my opinion. They have great IP. As far as the science experiment, they get an A plus. As far as an operating business, they get a D for the last 12 months. So they ended up having a flat year, which was 45 million again. After guiding to 65, I told the IR person today that was the worst single miss in revenue versus a target I've had in my 42 year career investing. So they pooped the bed pretty bad. But the IP is so this year they put out guidance today for this year for the fiscal 25, and they're back to the 60 to $65 million target for this year. So they're still supposed to grow 35% this year. The battery business, to be fair, the battery business did have a bad year for most battery companies. It was an industry that had very high expectations for growth, and as everybody knows, the electrification of everything took a big pause, starting with passenger vehicles and spilling over into all kinds of industrial and commercial vehicles, which is where these guys specialize. So they have a very unique product. They have a battery product that triples the life of the average lithium-ion battery because it uses a ceramic separator instead of a polymer one. And therefore, the total cost of ownership is very low. But you have to pay a little more money up front. And unlike most battery businesses, these guys do 35% gross margins, and most other publicly traded battery companies do 15 to 20. So they charge a premium up front for their battery, for the fact that you can't catch it on fire if you lit it on fire, which they did and tried to do. So you don't have to worry about thermal runaway. And everybody knows every once in a while a Tesla goes up in flames, and it takes like 2.5 days and those oil firefighter specialties to put it out when the Tesla gets caught on fire, right? So they're much safer and much longer lived than the average battery. So they sell their business. They export batteries to Japan, which basically invented the lithium-ion battery, and their biggest customer is Toyota. And that's why I say the IP is good, because any company that could sell, lithium-ion batteries from the U.S. and Canada to Japan has to have some damn good IP. And I just thought that the forklift business was ready to rip and replace lots of lead acid batteries over the next 2 or 3 or 4 years, and that would lead these guys to have at least 30% revenue growth and maybe closer to 50 over a 3 or 4 year period. That's really what I was shooting for when I bought this. So in the process of pooping the bed, the stock went to 2. I averaged down. I'm at 3. The stock is 260 today, something like that. I have a small loss. I'm going to give it another year, another 4 quarters for them to start showing the 30% growth I expect from the business. They did get a $50 million loan to build a factory in the US and to build batteries and assemble battery systems in Jamestown, New York. About 10 minutes from the Cummins engine has a big factory there that produces diesel engines. And the Cummins engine would be a great buyer for this company if they ever wanted to explore Plan B and sell the business. So it's a 90 million market cap doing 65 million in revenues. It's about 2 times EV to sales, which is very inexpensive for a high growth company, but they got to grow. And they to have a year where you had a flat year, even in a challenging market, that shows that they messed up on their execution this year.
It's funny. I actually typed in ENVA, which is a Nova, instead of ELVA.
Right?
That ENVA chart looks a little better. But I, like you, buddy, I like down into the right charts. Me and you are a dinosaur breed that likes charts that look bad, unlike Kevin, who like charts that look good.
Paul,
Um,
Paul likes to buy high and sell higher too. So we have 2 guys here.
yeah, we got two bad chart guys. We got 2 good chart guys, and so we have a yin and yang here of this.
A lot of different
of
ways
this
to
show.
make money, Ben. A lot of ways to make money.
That
You
is
just
the
have
beauty of the market.
you just
Absolutely.
have to have a process and not swap between liking to buy new highs and new lows. Because if you get them mixed up, you can really hurt your net worth. So anyway,
Yeah,
so
over time.
So back to the battery company. If they deliver their 65 million this year in sales and then grow another 30 or 40% next year, the stock will go up 2 or 3 or 4 fold. It'll be a good stock. But I have to be blunt here. These guys have been some of the worst executors of a 1 year business model that I've seen in the last 40 years in this business. And I'm hoping that they figure things out and Toyota, starts to grow again. And they got a 3.5 million book and ship immediately order for. They don't say this, but Amazon is probably their biggest customer. And when Amazon just a massive order, they have a few hundred data centers running Amazon distribution centers running on their batteries, their forklifts. And if Amazon really ramps aggressively this year, it could be another big boost. So they have, great reputation. The product's excellent. The customers, if you go onto their website, the customer list is a who's who of the top-notch distribution companies in America and large producers of products in America. So a lot of things are very positive. It's just that, last year was a dumpster fire, and they got to get things, back in growth mode again. If they do, we'll get paid. So far, it's been no harm, no foul on the stock. But I will tell you this: it's got the most raw upside of any stock in my long portfolio. And you guys know when you buy these down, and just getting back to even could be a double. Like I've had a bunch of stocks that did that just in the last 3 months. But these guys probably have 5 to 10x potential over 5 years if they really grew the way I expect them to, and they think they should grow. But they're also having levered up to add on a new big factory when they're already only at 30 or 40% of capacity. They're also at most risk to go away. So it's the highest risk, highest reward situation in my portfolio.
Love it.
Raw upside.
And it's not for real money. This is unfortunately, I took it from a lottery ticket to a small regular position in the averaging down process. So I have more than a 1% position in something like this. But this is, a stock with so much risk and so much reward is more of a small speculation position that if it works, you make a lot of percentage. And if it doesn't, you might have to write it off totally. That's the position it's in.
It's so if we were at the NFL draft, we just label it raw upside, just like Saquon Barkley.
Raw, big raw upside. High ceiling, very low floor.
All right, I get it. And I will say, let me just add one little thing. I entered the foray of buying auto suppliers last year with the Borg Warner spinoff of a ticker PHIN, Finia, which is basically the opposite play of Elva. It was an ICE, old school manufacturer that made money off hybrids and off, the adoption not being fast as people thought. So a slower adoption curve of EVs and batteries, and that thing's been all-time highs for recently. And it's been it's a boring business, but these things can run when they run, these auto suppliers. You just need to get a little love, and then like they can move. So that's my first foray into auto suppliers. You're talking about auto supplier stock that's not loved right now, but maybe in 2025, 2027 period, this could be a $10 stock basically. Is that a fair way of thinking about it?
That would be in 2 years. It could easily be a $10 stock.
I think you're muted, buddy.
I'm gonna give them another year to get things moving in the right direction. And if not, I'll sell. And by the way,
Robert, you're muted.
How can I be mute? I didn't touch anything.
I heard him.
We hear him.
Yeah, I'm good.
Yeah.
Yeah, all right. As as I was saying, this has significant upside, but it's not riskless, and they need to get their act together. I don't think Ben hears me.
Ben's in the forest there, as you can see.
Yeah, Ben, do you hear us?
I'm muted or something.
Yeah, your speaker's off, Ben. Well, then maybe it takes. Paul, you could be the moderator until Ben figures it out and get bakes going.
All right, I'm going to start if you don't mind.
You got it.
Go ahead.
I just want to say, first off, I adore Canadians, and I think they're wonderful, and I think they should be subscribers to Wall Street Beats. So I want to make sure I got that out of the way. Number two, talk about a segue. There's a lot of ways to make money, and frankly, we've got 12 experts here, and we're all making money in very disparate ways, which I think is fantastic. And I listen to all these services, and everybody sounds smart, but we show that we're smart, and we make money, and we tell you how we're doing it. So here I go again on my own. White Snake for 2000, Alex. I listened to Andreessen on Rogan, okay? And I don't, the market doesn't care about your politics. It doesn't care about mine. I don't care. I listen to smart people, both on the left and the right. And I recommend the whole 3 hours, frankly. But Mark Andreessen, legendary VC, at 2 hours into this, brought up something about RFK Jr. He's clearly in the mix with David Sachs and Elon Musk and all these people. But he brought up RFK Jr. and saying that corn subsidies are at risk. I'm not on the street. Corn subsidies are at risk, and he brings up the unhealthy effects of high fructose corn syrup, which I hadn't thought of. But I plugged it into my Google alert so that I'm going to see what's happening with corn subsidies, high fructose corn syrup, and I picked right now. If you can blow this up, this is the best looking chart of corn producers. I listened to this last night, and I went through and I looked for corn companies that farm corn. Ingredion is the one, INGR. This is the best looking chart, and I don't really know why. This is. They make liquid sweeteners derived mainly from processing of corn. So it clearly doesn't believe RFK is going to be a negative influence there. But you look at some of the other names, Archer Daniels Midland, dead. Niedermeyer, dead. Bunge. There's nothing going on here. But I bring this up because, number one, I haven't come across this before. It kind of makes sense. It plays into, make kids healthy again. And I'm going to be looking for for other ways to participate on the long and the short side with people that are in the crosshairs of RFK Jr. I know Ben has got some ideas there. If he's not live now, great. We'll do it another time. But this is the other. He has some ideas about the users of high fructose corn syrups and what's it's going to mean for them. A couple other things from Andreessen just to point out: stop student loans. That's one of the things that they're pushing, and most workers aren't appearing in the office. And he talked about one agency where they negotiated to show up once a month, and they come in the 31st of the one month and the first of the next month, and so they're working 2 days in the office for 60 days out of 60 days. So I've been saying this forever. B2, Ben Bry and I have been on this for a long time. Doge is for real. This is going to be happening like a whirlwind January 20th. And you heard it here first. And we're going to be showing you 60-second clips next year of saying, we said this, we shorted that, and we made money. And I just wanted to be in front of that. And Ben's been great on this. My next chart is, and it kind of plays into pushback that I get, that the defense is sacrosanct. Oh my heavens! Both sides of the aisle, you have to have defense. Well, and I can't say it's entirely based on the potential for the government getting lean, but Northrop Grumman, NOC, is taking on water. This is big volume, declining, testing the 200 a day. It hasn't violated it yet. And it's the weakest of all the defense stocks. I know defense is $800 billion out of $7 trillion. But I'm going to be watching this for breakdowns here, because I think the Defense Department missed its 7th audit in a row. They're not going to be immune. And I think everybody's going to go on a diet, whether they like it or not. In this case, defense spending. Lastly, I'm going to send some roses to Ben, and I thought he was going to be here for this. This is Ben Bry's short of Booz Allen, which he talked about. This is, they get 95% of their revenues from the federal government. This is the violation of the 200-day moving average, which means that the trend has changed. This is a feeble bounce on low volume into this resistance here. I think this is like a deer that's been shot. It doesn't know it yet. And this is going to be going lower. So we're going to be coming up with more of these ideas. I want you to stay tuned. I want you to subscribe. The government spending is going to be coming down, and a lot of these companies are going to be walloped, and I don't think they know it yet, and I don't think investors know it yet, although the stock market is starting to confirm a lot of this.
Hey, Bex,
the one thing I'd say is that these stocks and this whole trend of like what Trump's going to do, what the government's going to do, there's a big speculative component. And I was short the stock and I covered it because it was like a nice, fast move. But like, we're now all in the game of anticipating what's going to happen. And then what the market does is extrapolates things. And so I think that one thing I would give to listeners is that when moves get too fast, the rate of change and like things, then you might want to take the other side and cover, because we don't actually know what's going to happen on a dollar basis. We don't know exactly what's going to happen and what we should capitalize. So, look at that Booz Allen chart. Like, okay, it just had a huge drop. It is a consistent business that could change, but like trying to know what is exactly going to happen is a difficult game to play. So it's like, hey, let's see if it can, to use technical parlance of Bakes, like let's see if it can retrace some of the down move, and then you could fade it there, right, Bakes? Something like that, like kind of in order.
Yeah, and this is why I used volume as a confirming tell. The volume on the up days is anemic, and the selling pressure picks up as soon as it raises its ugly head, because all these people here from 150 to 190 are losing money. And yes, it could eat through and close this gap up to 170 or so. I tend to doubt it, because look at what happened here. I mean, this has been an absolute monster for years and years and years. So I think rallies are going to be feeble. I think they should be faded or shorted. And I think the chances of getting to 170 are pretty slim unless I see change in volume or I see earnings blowouts or I see the Doge committee saying, oh, Booz Allen's the greatest thing since sliced bread. I doubt any of those things are going to happen.
Hey, Let me follow up with one thing. The INGR. So that had a positive chart. All the other ones in the peer group sucked. And if we do have a corn subsidies that go away, are you saying that INGR should be the regression to the mean to join the rest of those dogs?
Yeah, Paul, I'm going to full disclosure. I listened to Andreessen last night, and I looked for all the corn stocks last night, and this is what I came up with. Just with that cursory search.
Okay.
So I'm going to be talking to Ben. I'd love to have Ben, if you can, talk about your CDS idea that we talked about offline. I don't know why this looks so good. I will find out, and I'll report back.
Yeah, I mean, again, we're back in this game of saying, oh, hey, what's going to happen and what are politicians going to do? And I always come back to my favorite adage by my friend Tom Jens, which is never short engineers, never long politicians unless you own those politicians. And I feel like that's a good way to live your life as an investor is don't ever count on a politician to do you a favor unless you have done them a favor and then they're doing you a favor in reverse. So we can sit here in this weird period and all speculate, but I will say to the CDS idea, McDonald's and Pepsi and Coca-Cola and Nestle's CDS. So what I mean by CDS is credit default swap, which is the price above the reference rate of credit risk that's priced into there. So you have a cash price, which is their cash bonds, and then you have the credit default swap, which accounts for swap rates, which are very much trading at a premium these days. Bank balance sheets are they don't have a lot of capacity, so they're a little lower than the cash rates. But the point is that there is a trade to be thought about of look at Walgreens, an institution of America, an institution where we all went and picked up our drugs, we might got a little candy or whatever, and then that was 60, 55 credit spread. Now it's 500, right? And Robert and I in August, I remember we were looking at Walgreens.
And the same price. It was $8-9. So
exactly. The equity's trading like an option now. Yeah. So the optionality has become the dominant theme of that, and there's a wide range of outcomes for that. But the point is when it was trading at a 60 CDS, the stock was much, much higher. There was a certainty about it. And so if you're listening to Kevin and you think, hey, maybe there is actual change coming along, the credit spreads of some of these companies that have done very well off how the government's run are mispriced. And I know that the average listener probably isn't in the credit spread swap business. It's an institutional game, but it's something to think about of you could have a repricing of these stocks. You could have a repricing of the way that these companies, their cash flow streams are priced by the market, and the equity should follow suit. Because again, to Robert's point, Walgreens is an $8 or $9 stock. So that the credit spreads blow out, the equity
there's a lot of credit there they have to default.
I want to mention this. Subscribers. I didn't talk to Ben about this prior to this morning. He comes at it from an entirely different angle. I come at it from a different angle, and we're both saying, "Hey, something's going on here. Let's look at getting away from corn and high fructose corn syrup. And maybe there's nothing to do, but the fact that two of us, I mean, he's got probably 50 IQ points on me, but I know a chart and I know how to listen to people that are out of consensus. And I think that we got something here. And so please stay tuned and please subscribe.
Yeah. And, I remember in the early days of Wall Street Beats telling Herb Greenberg that I was short Pepsi. And he was like, why are you short Pepsi? And I was like, look, this is and again, my uncle is the head of marketing for General Mills. So I think of General Mills as very similar to these companies, right? They're in the sugar selling business, they're in the packaged food selling business, and I don't think they're in the healthy food business. I mean, they might have a couple of healthy items, but I don't think that's their core business. And so, what were they doing for the last couple of years? They've been taking price, mid-single digit type price increases. And what happened with volumes? Volumes are negative to low single digits. And so they're getting away with that because I don't need to put a chart up, but the math works. Trust me. Like, you can grow earnings with low single digit volume negative and mid single digit 6, 5, 7%. But there's a point here where, like, if the government's going to change, plus there's no growth, like there's negative demand elasticity to what their strategy is, there is a real non-linear price potential here, that those cash flows that everyone just takes for granted, is that we all have to drink sugar water the rest of our lives, could be changed. And this isn't like, oh, short the stock today, this is that, but this is something that is worth keeping an eye on, that some of the businesses that have done this, and why we have the most obese country in the world, why we spend so much money on pharmaceuticals, why we have all these things, it's not a God-given right that we have to be like that. And if we start thinking about these things, it's something that could be a monster trade, not today, not next week, but multi-year. And it's something to be aware of. And, it might not happen, but it's priced like it's not going to happen for the most part. And I think that's the way to take away from what Kevin's saying, is that there's an asymmetric bet that's there with, it's a negative carry trade, but it's not necessarily something that's like, oh, well, if I'm wrong, I'm going to get ran over the way MicroStrategy might run me over shorting it, or, something like that. It's like, hey, I might lose 10%, but if I'm right, I could make 30 or 40%. So it's a fantastic risk-reward trade, not necessarily something that's going to get you rich, but it is something very interesting that people should be keeping an eye on, because there is a chance, it doesn't mean it's going to happen, but there is a chance that we could have some actual changes in how things are done. So I appreciate that, Kevin. It might not happen, but we can all kind of hope for a better situation. So anyway, this is Wall Street Beats. This is Paul Meeks, Kevin Baker, and Robert Marson, the raw upside Elva slash Saquon Barkley.
The king of raw upside. All right, guys.
Take
Happy
care.
Thanksgiving,
Enjoy
everybody.
Thanksgiving.
Happy Thanksgiving to all of you.
Thank you, guys. Appreciate it.
Take
Happy
care.
Thanksgiving.
Raw, Mr. Robert Raw Upside Marson. That's what we're calling you from now on.
Boys, I'm going to go see my parents.